Good evening. Ira Epstein with your SPDR ETF stock market wrap-up for this Monday, the 16th of June, 2025. Remember, it's a shortened week. We have Juneteenth, day off on Thursday. I'm worried about a word here, and I want to share it with you. Desensitized. You know, G7's going on. All the world leaders are running at the president, and they all want to make a deal or make sure that their deal's not really going to be rough. As for getting tariffs removed, that isn't going to happen, all right? Somehow, some way, every country is going to have tariffs placed on goods. Now, if you make a deal with the president, you might be able to get some of those tariffs completely removed for a certain time. Example, I heard today that the president's going to take UK steel into a certain number, no tariffs on it. On the cars that the UK wants to send to the US, 10% tariff on the first 100,000 cars. Got it? So there's certain elements that are being done. Rest of the goods, 10% tariffs. That's what I understand. And in return, American beef, pork, and energy will be going to the UK. So we're expanding our markets. That's what this president's doing. And any way you want to understand it, I leave that in your hand. I understand what he's doing. It's all called, he's using the trade deficit the United States has with basically everyone and lowering it. In the process, he's trying to take the money he gets from the tariffs and find a way to convince Congress that growth with those tariffs will make up the difference for the deficit it initially creates. Do they buy into that? And they being the Senate now, we know what the House version is. No. The Senate's going to throw out the $40,000 SALT deduction and go back to a 10. I'm reading about that already. This is the likely part. And then it'll get in reconciliation, and they'll have to find a number in the middle if they can, all right? You know that the heavily Democratic states in New York, New Jersey, I can go on and on, they're going to fight this tooth and nail, all right? There's no question in my mind what they're going to do. They want those deductions for their people. And many people don't have that. Living in Chicago, where taxes are insane, I want it. LA, they want it, all right? The big, heavy populated states want that SALT deduction to be higher, but at what cost becomes the reality of the situation. So you get to that. The Iran-Israel war is desensitized. You know, next week, they're just fighting. The shock of what they did is there. The carrier group, the Nimitz, will get there. Why? If Iran gets crazy and tries to choke off the Straits of Hormuz, nice to have two carrier groups there that can defend it. Plus, we don't know the ships that the UK and other countries all have put in the water there too. Nobody wants the choke point where energy is cut off out of that region. So there's a problem, and Iran has the problem. If it cuts it off, they're hurting their biggest supplier of money, China. So I'm sure that on calls we know nothing about, they've got their hands full with China, because to close those straits in some way would hurt it. And Israel's being very deliberate in their attacks and not killing infrastructure that would hurt export of oil, but they're destroying what they can for the internal use of gas and oil within Iran. I hope I'm saying that right. Iran wants to make a deal now. That's what they're letting known through the different channels. They want to be flexible. Let me explain the word flexible. The only thing flexible about that word, from my vernacular, which I think the president and Prime Minister Netanyahu will say, is no uranium enrichment. With that, this thing ends. It's pretty simple. So it's up to why do they have to have it? And you know it's warfare, and they know we know it's warfare. So that's what it comes down to. They can get all the enriched uranium they want from Russia. Who said they can't? Russia's offered it. They don't have to enrich. All right. What about news? Tomorrow's a huge news day. You've got import-export price data at 7:30, advanced retail sales data 7:30, 7:55 Red Group weekly retail sales. The Federal Reserve at 8:15 will give us their monthly production and capacity utilization. We're going to get the National Association of Home Builders, their monthly index number. That comes out at 9. American business inventories. I'll be looking at that one. Are we building, depleting? What's going on? If you saw the today, the New York State, the Empire State numbers as to what they're doing in their manufacturing, it was an ugly set of numbers today. API, they're going to come out with their member stockpiles, and I've covered Iran and the G7 as to what they're doing. So why don't we go look at some charts and get a picture here? And I do want to remind you, as I just saw that video screen go by me right here, my Father's Day sale ends today, Monday, Central Time, 11:59 p.m. Monday. 1/3 off of any of my quarterly research packages. Take advantage. Take a look at it for 3 months. Decide, do you think it's worth it? At $34 for futures, $36 for the Spider ETF video, what these are, come on, you get both of them together for $66. That's 90 days. You're going to get more than you think how many videos. I do on average 22 a month of buy here, sell there, do this on weekly charts, daily charts. I mix everything together, and you're going to get 66 of those. That's pretty good. Where you're going to get that kind of research at that price. And I track what I say. So you get to see it unfold right from the time we put the trade on, assuming it can get filled, looking at the market afterwards until the end, and then it's gone. Do I run a track record for all the trades I've made? No. First of all, it's called nonsense, all right? I don't know what you take and don't take in the trades. I'm not trying to build a track record. This is what I'm saying. If you follow it, fine. I'll follow it from beginning to end. I promise you there will be losers, and I promise you there will be winners, all right? How they balance out is the question. Anybody can throw a dart and get a winner. Anybody can throw a dart and get a loser. What do you do with the rest of it? All right. So that's my thought process. All right. So let's go over here and look at ET, because I've been looking for a pullback in this market to develop. So we can see how the market has come up, had a nice rally high, and today's the first day where we've had almost a 1% break in a while. Okay. You have a pattern of higher lows. This is called a swing line. And what it does is from the current bar, I attach a line to either the prior day's high or low. I teach this in my trading courses. You can do it by hand, or you can use my swing line formula on our charting software. It's available on a lot. It's even in TradingView, by the way. So if you use TradingView, it's in there. We have a suite of indicators you can use there. Higher lows, higher highs. Okay, so the trend is up. I mean, even the most basic charter should know, definition of an uptrend, higher lows, higher highs. You've got it. Next, where are the moving averages? Well, one of them is the 100-day, and the market seems to be having a problem there, and it had that same problem here. Interestingly, when it fell, it bounced from it, and then once it got under it, it stayed under it basically and kept itself going. So the 100-day average has become an important average. The big support in the market comes in at the gray line, which is the 200-day average, and the red, which is the 18-day average of closes. Now, some people use the 20, the 21. I don't care what you use. I like the 18 for so many reasons. I used to buy services that would give me the best moving average for any given market in the futures. I found it to be not worth it. I finally settled on the 18. I didn't think it worked in stocks until I tried it over many years. And I discovered it works the same. A chart's a chart, a chart. At the end of the day, take the name off. I really mean that. Take the name off. When I teach in my charting courses, I take the name off. I don't want you to have an opinion. I want you to trade the patterns. This isn't about investing. This is about trading. Do we understand the difference? Kramer is about investing. This is about trading. There's a very big difference there. Higher lows, higher highs, and away you go for the support coming in at 1796 to 1787. To keep the uptrend alive on a daily chart, I don't want to see 1776, that magical year for America. I don't want to see that taken out, so I don't want to see 1775 hit. So I expect to see buying in that number, and I expect the pros to have their stops there. The other resistance point that came in was the upper Bollinger Band. Notice how it got together with the green line here, and the two of them stopped the rally. You got right up into the combination 1830 to 1842, and kaboom, the market stopped its rally. Yes, you rallied to 1871, and you immediately fell back into the band. The idea is, how many times do you settle outside of the Bollinger Band? 5% of the time, according to the way the algorithm is built. So using that, what you want to do is understand. Trying to sell under that, I tell traders, if you're determined to sell, why do you have to sell under the band? Why not sell inside of it? And often that can mean you're getting a better sale or a better buy if you're trying to buy. Often. The word always doesn't pertain to anything, except me saying to you, I never tell clients to buy over or sell under a Bollinger Band. That is always. Higher high, okay. Higher lows, still bullish, and a correction coming in momentum. So I'm looking for this area to be the support. In materials, it's suddenly getting an MP. I saw it today mentioned all over CNBC early in the morning as one of the favorites. I'm going, I never heard of this company. How many rare earth companies does America have that are listed companies? And I'm going, wow, that was interesting. And that gave it a bid today. As soon as it's mentioned, people are going to want rare earths. Again, do you buy over Bollinger Bands? No. Am I bullish? Yes. You're also getting a bullish crossover that just happened today. Look, the 18-day average just got over the 100. So you have a complete bullish setup here. You have the shortest term average over the 100. The 100's over the 200. Market's going into a full bullish setup, and that's why I started watching this market. I said, I think something big is happening here. And on pullbacks, I know I'll be talking to my subscribers in the morning about that. And I started covering it in my morning subscription video as of this weekend. Avgo, which is Broadcom, consolidation. It's in an uptrend. Momentum has been pointing down. It got one time up to these bands. I can make an argument it's going to probably try to fight a battle around that 18-day average. If you take out the lows of Friday tomorrow, I think then that's probably what the market wants to do here. Do I see a reason to jump in? I don't. So whatever it does, it does. Google, slipping back, but look at all the support you have. You have the 200-day average, this gray line right here. You have in red the 18 and green the 100. So I'm looking for that to be your support area in the market. It's had a very nice rally since it got under into the 140 area here, and it's come back up $34. That's a pretty neat rally. I mean, that's a big rally. It's 20%, right? So market doing pretty good there, ready to give it up. In Netflix, I've mentioned to you that I think the 18-day average is what's in play. I'm not convinced it's necessarily going back to 1177 on this run, but I have my eyes open. If the market gets under 1201.80, it probably does make an attempt at that. So I'm looking at that going, what do you do with that? I think that very aggressive traders are probably buying the 18-day average, but I think that's where their stop's going to be. So I think they're going to risk, 1% or so. In Robinhood, overbought. So yeah, I get it. I love their story, but it hasn't been a good market to come into. It's not letting you in. It lost its bullish embedded reading. It never did break. It never, from that break, when it came down, got down here. And instead, it looks like it wants to challenge the all-time high. Sometimes that happens. In Tesla, this has been a bear market rally. You came off the lows. Now you're into the 18-day average. You have to close and prove that you've got verve to the upside with this market. And what traders are probably doing is there's a certain amount of buying happening before today's the 16th. Remember, on the 22nd, supposedly, we might get another delay, but supposedly the robo-taxis are going to hit in Austin, and we'll see what they can and cannot do. So I mentioned to you the other day, Guggenheim came out with a big sell recommendation in the market. We'll see. I understood their story. I understand a lot of people, they're looking at PE, they're looking at how successful will they actually be, how big is the total market for this going to be over the years for autonomous cars. I don't agree with Guggenheim. I think it's going to be a big business, bigger than they're saying. And the reason is you're going to be able to eliminate cab drivers. I hate that because that's a great spot for people, especially immigrants, to come into the United States. And with, as you know, because we've all been in be it Ubers, Lyfts, whatever, all you got to be able to do is follow the instructions on the iPhone or whatever they're using, and you get where you are. When I was a young man, I was a cab driver. I am the worst sense of direction person you've ever met in your life. I pitied the people that would come with me when I was young. I'd make them laugh so they enjoyed it, I guess. Higher lows, higher highs, and you can see how the market's fighting right through there. Stocks, we're still churning away in the semiconductors, and that's what you're doing. You're churning away. You're still bullish, haven't given that up. Obviously, the tech sector has been the leader recently in this market. We all see that. The financial services, I don't know. The financial select sector doesn't excite me here. I don't see a trend per se. I see a market that's just sort of churning around more than anything. In XLI, the same thing. So a number of markets have suddenly gone into the sideways action. You see it when you put on your Bollinger Band and that 18-day average, and if you have your momentum, like I do, it's down. Remember, your momentum on slow stochastics, if you're not a subscriber of mine, won't match mine. I modified the formula, and I did it by showing it before I ever did it to George Lane, the developer of slow stochastics. And I was friends with George. He used to be on my TV shows for probably 10 years, 15 years. I'd have him on every now and then. He was a great guy. And I said, I love your momentum index, because I used to teach relative strength, MACD, and others in my course. I used to travel around the country and gather rooms of people and go to the conventions and be a speaker and so on. Well, to make a long story short, once I found this, I fell in love with it because it has a personality, whereas the others don't. And I found it to be a better leading indicator, and I made a change. My subscribers, if you write me, paid subscribers, I will give you the formula. I won't go to your computer and change it. You've got to do that. And believe me, it's not the 3, 5, and how many, the 80, 20. That's not what it is. It's in the formula. In XLE, higher lows, higher highs, you're fighting your battle. You've been fighting the battle. So it's the wall of worry, but because energy prices have come up, okay, so XLE, all the refineries, the drillers, they can make more money. I mean, now it's not like it was when we were down over here, all right? It's a different world, and it's come up $12 because energy prices have gone up, and they've stayed up. And, of course, with the Mideast, we don't know what the game is going to be, so that gives that a bid. In the gold market, take the name off the chart. You hit a Bollinger Band and you're not embedded. I think the pros are coming out. Can't be clearer. Silver is still embedded. I like silver over gold. Lose the embedded reading. I don't want to have silver, but until that red line closes under 79, I like what I'm seeing. Copper, you have the embedded reading. Now, did copper lose that reading on Friday? No. Got to close under 79, not 79.19. And you'll say, well, Ira, if I wait for that, what do? You do wait for the close. Did you ever hear of the aftermarket? Get out in the aftermarket. Pretty simple to do, not difficult. Higher high, lower low. Market's still embedded, so still good in my opinion. The BND, lower and low, higher high. But why do you want to get involved in whatever the Fed's going to say? What the Fed meeting is going to be all about is the dot plot. What do the members think? What are they saying is going to happen in September? September is what everybody's geared on. That's where they seem to think that the Fed has to make its move. And there's about a 60% probability when I looked at it last at the CME Fed Watch page. I don't care. Those numbers change every day. And they're going to change when you look at the dot plot. So get the dot plot on Wednesday, do a snapshot before 1 o'clock, and look to see after 1 o'clock, after the dot plot is released, what the new numbers are. They'll change again as the Fed chair speaks, and then you'll have an idea of where the market's settling in given the current state of fundamentals, giving you secrets as to how you keep up with that. Dollar index still bearish. I am not bullish, but it is too oversold, I think, to deploy new money into it. And I am bullish on FXE, but has it embedded. So today, both numbers were over 80. Yesterday, both numbers were over 80, and the day before. So you have your embedded reading. So now, on pullbacks, the market gets very interesting until that's red line closes under 79, I expect to see trend buy. All right? So take advantage. Join me. I pray you do. Come in with the Father's Day special. You've got just a few hours left. 1/3 off any quarterly research package. I'm Ira Epstein. You have yourself a great day. I'll catch up with you.